Reliance Industries posted a healthy growth in its retail business in the fourth quarter, but subdued performance in all other segments meant that the company's profit fell for the first time in over 4 years. Soumeet Sarkar is standing by with the key takeaways from Reliance Industries' earnings. Soumeet, what stood out? What didn't? It's been 3 days now. You had time to dissect the numbers.
Well, I start off with the 5 key takeaways from the earnings, which will say what stood out and what actually did not. So on the standalone business, if you see, Reliance Industries net profit declined by nearly 4% to close to 8,500 crore rupees, which is the first drop in its net profit in the last 17 quarters. Now, this was because of a weak performance in both of its key segments, that is the refining and petrochemical segment. Now, for the refining business, if you see the key number, that is the gross refining margin, that came in lower at around $8.2 per barrel, which is the lowest in the last 17 quarters. Now, this lower gross refining margin, coupled with a fall in its volumes that you can see here, it came down to 16 MMT, and that was because of a plant shutdown. Now, this too led to a fall in the refining segment performance of Reliance Industries in the fourth quarter of financial year 2019. However, something to cheer for from the refining segment was its premium to the Singapore gross refining margin. Now, that expanded to $5 per barrel, which was the highest in the last 5 quarters for Reliance Industries because of a lower gas prices. Now, gas is used as a feedstock in the refining business, and lower gas prices led to this jump in the premium to the Singapore gross refining margin for Reliance Industries in the refining segment. Now, for the petrochemical segment, if you see, after strong 8 quarters, earnings from the petrochemical segment in the fourth quarter declined by nearly 3% to close to 7,900 crore rupees in the fourth quarter. Now, this is the first decline in the last 9 quarters because of a weak pricing environment and marginally lower volumes that we had seen in the fourth quarter for the petrochemical segment. Now, in this segment also, the retail performance stood out once again for Reliance Industries on a consolidated basis. Now, if you see the EBIT margin for the retail segment, it was the highest ever in fourth quarter at 4.7%. However, the growth rate for the retail segment has now slowed down. In fact, if you see the revenue and EBIT growth rate of the retail segment, it was the slowest in the last 9 quarters for Reliance Industries in the fourth quarter of financial year 2019. Now, for the Jio earnings, if you see, it was a disappointment primarily because of the lower average revenue per user. Now, analysts were expecting the ARPU number to be close to 129 rupees for Reliance Jio, but the company reported an ARPU of only 126 because it has been adding customers at lower rentals, and that has led to this lower ARPU for the 6th consecutive quarter for Reliance Jio in the fourth quarter of financial year 2019.
So one is the numbers, Soumeet. The other is the investment that the Reliance has continuously done in telecom, digital, media, and all of that has increased the debt burden for Reliance Industries quite significantly, I presume.
Yes, it has. If you see in financial year 2019, the company's debt has increased to close to 2,87,500 crore rupees, and that is because of the capital expenditure worth 1,32,500 crore rupees done by the company in FY19. As you can see, its debt has jumped nearly 31%, which is the highest jump in at least the last 9 years that we have seen for Reliance Industries' total debt. But however, rising contribution from the petrochemical, retail and Jio business has kept its leverage ratio, that is total debt to EBITDA, much stable at close to 3.43 times. Now, this increase in debt, this 31% increase in debt, despite the fact that the company has demerged its tower and fiber assets, which should have actually led to a lower debt. Now, if you see, they have given this details of this demerger of tower and fiber assets. So the company had invested close to 1,25,000 crore rupees in this tower and fiber assets. However, in this demerger, they have valued the tower and fiber assets again, and they value this demerged entity at close to 2,03,000 crore rupees. Also, because of this demerger, the company has transferred a debt, that is bank borrowings and other liabilities, worth 70,700 crore rupees in this new entity. However, despite this transfer of debt, the company's total debt has increased by nearly 31% to close to 2,87,000 crore rupees. Now, this transfer of tower and fiber asset would also mean an increased cost for Reliance Jio starting FY20, because the company will now have to start paying the investment infrastructure fund, which will hold this 2 tower and fiber asset for using this asset, so which will lead to a lower EBITDA and lower profits for Reliance Jio starting first quarter of financial year 2020, because they'll have to start paying the InvIT for using this assets starting FY20 now.
There will be a debate at some point of time, Soumeet, on what all of this does to rates and for how long can Reliance continue to hold rates at those levels, isn't it? I believe they had some comments to make at the recent
in the analyst meet, they did say that they are going to focus on subscriber growth and not ARPU, which means that they're not going to increase the tariff hike. That there won't be any tariff hike, at least for the near term. That's what the company specifically said in their analyst meet on Thursday.
By the near term, you would presume it is about a quarter or two?
Well, it's difficult to say because the near term has been going on for the last 1 year. People are expecting the tariff hike to come in, but it has not come in.
No, but Reliance might be meaning about a quarter at least.
At least for the next quarter, then there's no tariff hike that will be coming in from Reliance Jio's side, given the fact that they have clearly said that they're going to focus on subscriber growth.